This week on the Art of SBA Lending.
I've got to be careful saying it, but I actually do not like banks. I don't like the stereotypical banker mentality.
Pet peeve of mine is kind of like respect the work that the broker put in.
The best BDO is like an offensive coordinator, right? Like they're helping to run the whole game plan.
Up front, the urgency needs to be there specifically because Jeff Bezos just kind of ruined it for all of us.
In 2020, the banking industry was forced to accelerate into the future, and now there's more innovation than ever before. And many of my colleagues are embracing these tools, and they're winning. But the banks that are slow to adapt, well, frankly, I'm concerned. Here's an example. Bank A uses Lumos and has over 1 billion data points at their fingertips that allow them to, within seconds, access all this data. Local economic data, industry insights, even a predicted expected loss. And Bank B, well, their underwriter spends hours Googling it. Which bank do you think is going to be winning 5 years from now? Guys, we can finally make credit decisions using actual data. Let Lumos take your small business lending to the next level with cutting-edge analytics by going to lumosdata.com and scheduling your demo today.
Hello and welcome back to the Art of SBA Lending podcast. I'm your host, Ray Drew. And today we're diving into the state of the SBA lending marketplace from a different perspective, the loan broker's perspective, possibly the most important perspective, because without loan brokers, most of us don't have deals. Which brings me to my first point, no pun intended. The loan broker is becoming more important than the BDO. Think about it. They're the first person to speak with the borrower, and they decide which bank gets to see the deal. Now, for a period of time, the BDO had all of the trade knowledge, but that's no longer the case. Shout out SBAExpertCourse.com. The information's out there. The FOIA data is out there. SBA loan brokers are building highly sophisticated operations, and whether lenders want to admit it or not, they control the deal flow, and they're an incredibly important part of this ecosystem. So how are lenders adapting? Well, that's the problem. They're not. See, back in the 1990s, non-bank lenders like the money store put the sales rep model into play in SBA, coining the phrase business development officer, a mix between a business development rep and a loan officer. And these BDOs would go out into their backyard and develop referral relationships. And that's how an SBA lender entered various geographical markets. And rarely did the lender pay a referral fee, by the way. 30 years later, a lot has changed. Given the power of social media and with less of a focus on geographic lending, you'd think the BDO model would have shifted. It hasn't. Lenders are still doing the same thing and absorbing the referral fee. In essence, they are paying the BDOs to go out and pay brokers for deal flow. Fine, if that's what you want to do. But how's that working for you? How is your bank going to attract deal flow from these brokers who now have direct access to the top 100 SBA 7A lenders? All of a sudden, your business isn't built on long-term referral relationships, COIs in your backyard that you see and you meet in person. No, it's based on how competitive your product is. What is it that you as a lender are offering to the marketplace? That is what I hope to get out of today's episode. I want to understand the state of the SBA lending marketplace, which lenders are winning, which are losing, and why. With me today, I have a panel of SBA loan brokers whose 7A volume, if combined, would represent a top 1 or 2% 7A shop. So you're going to want to pay attention. From Pioneer Capital Advisory, we have Matthias Smith. From Freedom Business Financing, Jerry Freedman, and from SBA Loan HQ, we have Zach Renta. Gentlemen, thank you for being with us today. Zach, I'm going to go to you first. You're a second-generation SBA lender, correct?
That's right. Yep. You touched on the money store in your intro there, and that is by proxy how I got my start. My dad was 1993, I think, is when he started at the money store.
We have a Money Store reunion episode coming up, actually. And this is a good time to remind you to subscribe because you're not going to want to miss that. And Sam Renta himself will be on that episode. In fact, Madison, can you put up a side-by-side of Zach and Sam here?
That's where the stash comes from, huh?
The stash is there. Amazing. So, question, why did you decide to go the broker route, not the BDO route?
So I started with my dad, obviously. I was working on heavy equipment. I was very tired. And my dad was like, do you actually want to put your degree to use and come work with me? Or are you just going to keep working on equipment? So I was like, I guess I'll work for you. I don't really know what that entails, other than I'd been to conference rooms and meetings ever since I was a little kid. But I started with him. We were an LSP. He's still an LSP doing his thing. And I've got to be careful saying it, but I actually do not like banks. I don't like the stereotypical banker mentality. And so for me, working as an LSP, working in the SBA world, I think we would all probably agree with that to some extent in the SBA space, because we're not bankers. We deal with a very particular product, and that's kind of how I see it. But I've been asked before, why not join our bank or come and be a BDO, which is not my thing. I also don't play well with others. I don't, I don't take authority very well. So I kind of just like doing my own thing out here.
Say no more. You have chosen the correct path. It does not sound like you'd make it very far as a BDO.
Right.
I mean, you could if you wanted to force it, but it sounds like you're more natural here in this environment, so that's great. So, the way brokers used to operate, Matthias, is basically they had, one or two go-to SBA lenders, and they would send all their clients to their favorite lender, and, of course, they'd have a backup in case the first lender couldn't do it. All their deals would be priced at prime plus 275, and we'd all say he can get the deal done, and that was that. Has that way of doing business died?
Yeah, so I would say, Ray, for us at least, it has. I'm just kind of looking at our closed loan dashboard or spreadsheet. Believe it or not, in 2025, we still use spreadsheets here at Pioneer. We've closed deals, I want to say, with 14 banks since the start of this year. So, each of these lenders, as you know, Ray, has their own credit box. And instead of just having one or two go-to banks, different lenders, kind of like doctors, specialize in different types of credit boxes, and that's how we've routed deals accordingly.
Got it. Okay. It does seem like the borrowers want more optionality, Jerry, and there's getting the deal done, but there's also getting the best deal. And well, let me ask you this: how do you balance the relationships with sort of like I guess like Matthias was saying, he works with 17 different lenders. I mean, how do you balance all that?
So, I mean, we work with a similar amount of lenders like Matthias. I like to say we work with about 15 to 20 banks on an annual basis. At the end of the day, our job as brokers is to really get a very good understanding of each lender's credit box, what their strong points are, what their weak points are. So like this, when a deal comes in front of us, we really know where to place it and who we're going to. I think like traditionally in the commercial real estate space, for example, commercial real estate brokers, they're all about shopping. While with us, certainty of close is probably the most important thing that we're selling. And having that understanding of what a lender's capabilities are and what they actually can execute on is probably the most important thing in our space. And that's what we try to focus on, getting to really understand what a lender's capabilities are and taking a deal to the right lender. That's the most important thing.
Well, let's get into it. This is exactly where I want to go, guys. Like, and Matthias, feel free to jump in, but like, how do you categorize the different 7A lenders in the marketplace? Because as we all know, as experts in the space, it's not just like there's so many sub niches within the 7A and so many different niches that each of the lenders are good at. What would you say are the main kind of buckets you would put them into?
So one of the buckets, Ray, I would say is kind of just based on the credit profile with like debt service coverage, what percent they'll lend on based on total project costs. So is this bank one that will go up to 90% where they won't require a seller's note? Is this a bank where they cap out around like 80% Are they huge on post-close liquidity? Is that not a factor? So we basically have a matrix where, to the degree that we're really able to hone in on the credit box, we wrote the deals accordingly. And like the way that I would group the banks is there's the most conservative banks, which everyone on this call probably knows which ones they are. And those banks typically want to see good post close liquidity, 1.5 debt service coverage or above. They want the whole down payment to come from cash from the sponsor investors. Then there's kind of the middle tier camp of banks, 125 to 145 DSCR. They might go up to 85% leverage. They're fine with the full standby seller's note. They'll lend on some of the more project-based revenue companies, but not the most risky businesses out there. And then there are the banks that will go down to the 1.15 DSCR, up to 90% leverage, and they'll fund the deal based on the TTM or one strong most recent year.
So why would anyone work with a more conservative bank? Is it the interest rate?
Typically the interest rates. So recently, like I've seen deals with some of these more conservative banks where they've closed with as little as 25 basis points over prime from an interest rate. Whereas if you go to the most aggressive banks, it's going to be prime 275 or prime 3. So that's generally speaking the biggest factor. What I'd also say too as well, Ray, is the most aggressive banks have a tendency not to provide lines of credit. And so there's almost a one-to-one correlation where if you go to the most risky bank, if you need a revolver, you're not going to be able to obtain it.
Interesting. So credit box, which I think falls into can you get it done and how do you structure it? Interest rate, and those two are kind of tied. They're kind of correlated. And then you said lines of credit, which I was talking about on LinkedIn the other day. Zach, do you have anything to add to that in terms of just kind of categorizing the different lenders?
My categorization is a little different. I don't feel like there's really a need for that many different banks. At the end of the day, the end product is very similar no matter where you're at. I work with several lenders who would be on the lower end of the conservative spectrum. They don't necessarily love 1.15 debt service coverage, but they're still pretty out there in terms of what they will lend on. But if I bring them a borrower who is well qualified and it's a stronger deal, they will also get very competitive on their interest rate. And so I don't, I do see that there's a need for, some of the lenders who are more conservative, but offering prime plus a half, prime plus one. They're offering fixed terms. But at the same time, if I can go to the same lender every time, and if it's a hairy deal or a skinnier debt coverage, they'll price it accordingly. It's prime 275, prime 3. But if it's a real estate deal or a long-time operator, they'll get competitive. They'll get in the prime ones, all day long. So for me,
Interesting.
it's more of who do I like to work with?
Gotcha. And that's definitely always been a big part of it. And I think my argument's more like less so. Like, for example, Jerry, if I'm a bank and I say, hey, I want to be at a 1.4 debt service coverage and I want to price my deals at prime 275 and I wanted 80% advance rate. So basically pairing the conservative credit nature of the lending, but with pricing that is more suited with an aggressive lender. Like, if you really like that person, do you see you sending clients there?
I mean, it's not necessarily about liking the person. It's about, what makes them a great lender overall. Maybe it's the process. Maybe it's how responsive they are. Maybe it's, their credit team really understanding what we're trying to achieve. Besides for these buckets that everyone else is mentioning, credit box, rates, a big part of what we try to do in vetting a lender is how's the process like? How fast of a turn time can they move things along? That's like equally important because as we know, especially on the acquisition side, time kills deals, right? So it's not about liking the person. It's not just about the rate. It's not just about working capital or a line of credit. It's really looking at the totality of what they're offering and making sure that they can meet our expectations.
Well, you probably like the person because they are responsive and fast and stuff like that. But let me ask you this.
Before we get into the episode, I want to tell you a quick story. I was at the BDO retreat earlier this year, sitting next to Dustin Baker and one of the Shatterbox learners that he had recruited into the SBA industry. Her name is Sarah. And Sarah told me that she closed $10 million in her first 6 months as a BDO. I look over at Dustin and I asked him, why would anyone hire an $8 to $12 million producer anymore? Sarah is one of many Shatterbox learners who has proven that you can take a smart young person with no SBA experience, teach them SBA, and in many cases, they will outproduce seasoned BDOs right out of the gate. Why are we so willing to hire a mediocre BDO with a six-figure salary when you can hire your next rock star, someone with unlimited potential, for half the price? You have no more excuse. Shatterbox has created the best learning platform ever created for the SBA lending industry. Join the 20 plus Shatterbox clients who have already taken the plunge on building talent from the ground up. I'm going to leave a link down below just for Art of SBA listeners. So if you want to learn how Shatterbox can help you hire and invest in bright young talent without breaking the bank, reach out and set up a discovery call today.
Is there a varying degree of ability to execute amongst some of these lenders? I mean, in my head, getting like the deal done is becoming less and less of a selling proposition, because I think in 2025, the marketplace expects you to get stuff done. Maybe I'm wrong.
You're
I
wrong on
mean,
that one.
yeah, I would say you're wrong. Yeah, I would say you're wrong too. I mean, think about how many active SBA lenders there are in the 7A program, at least preferred lenders. We're talking about around 1,500, I think. And the majority of them are doing under, 25 loans a year, maybe under 50 loans a year. And a big part of it is also understanding what kind of deals they do as well. So, a lender may be very working capital heavy, smaller loan sizes when it comes to business acquisitions, like they're really lacking and can't seem to get things done. So I would say most lenders are not necessarily focused on getting things done, and you maybe have the top 1 or 2% that have that ability. But even within that top 1, 2%, it's kind of touching on what, Matthias or Zach referenced earlier. It's really important to understand like what kind of deals they're doing.
So a couple of thoughts, Ray, as well, just to sprinkle in. I don't know if it's my turn to speak here, but back to the prior comment you mentioned about how back in the day, brokers would have 2 to 3 kind of go-to people. So one thing that I've seen over time is lots of these lenders will leave their institution every couple of years. And if you have too many pockets of concentration, so like back when I was starting Pioneer, I was about 5 months in, and one of the lenders I worked with at Huntington Bank left, and I had 6 deals going with the guy, and they had to get transitioned to someone else, and it was a bit of a cluster. And so I've tried to, over time, I basically try to solve for having that same problem come up. And then also credit boxes can change on a dime. If a bank has a deal that goes sideways or something comes up in the portfolio, and if you have too few lending relationships and you have one bank where they take on the more aggressive ones or the more middle of the road ones, and something changes on a dime, which I've seen happen too with certain banks, then you lose access to that type of credit box. So it's like you want to get a clone of that credit box from a different bank to not be stuck with that one bank, if that makes sense.
Yeah, no, that's true. Especially the last 5 years or so, where the market's been a little bit more volatile. Did you have anything to add, Zach? I think if I heard you correctly, you told me I was wrong on my own podcast.
Yeah, I did. I feel like one big thing with me, I don't really work with BDOs at all. Most of my shops, I'm direct connect to chief credit or SBA president. I don't work through BDOs that often. The shops I do work through BDOs, they are world class BDOs. They know what they're doing. They're responsive, but there are probably daily. Somebody will reach out on LinkedIn. No offense if anybody sounds familiar. And they want to look for deals. Very recently, a girl reached out and said, "Hey, my shop is super aggressive. We will lend on anything. We are trying to grow." Same story. People, they build out a national SBA program. They have the platform. They get a salesperson, an SBA director, an underwriter, a closer, and they just start lending on everything that's SBA eligible. It goes for a couple of years. They make some fee money, and then it crumbles, and they move on to the next balance sheet. I have a couple of deals right now that are super hairy. I happen to like them. I like the borrowers, but I sent them to this girl, and it took her 3 days. before she even responded. I had forgotten I even sent them to her, and she called me. And then she starts reviewing it, and
Wow.
she's like, "Yeah, we can do this." And then she puts out a term sheet, and I'm like, I don't think you can. Like, I need some more. Anyways, she takes it back. She spends a little more time digging in, and comes back and says, "Actually, I talked to my credit manager. We won't do this." And I was like, surprised. But there are still shops that they just throw term sheets out. That's their
Yeah.
pipeline builder. Let's throw out a term sheet, see how many we can get in the door, collect a deposit, and then they're stuck.
Wow. Wow. That's very insightful. You know how many people would have take that term sheet and ran and said, "Oh, I got a term sheet," and it just assumed it was,
Oh yeah.
like good as gold. That's interesting. You're bypassing the BDO. That's interesting because that's not a model you hear about too often. But to me, it's where I see this going, because if you're a SBA broker that knows how to basically put together a credit memo, collect a closing, what is the BDO doing at that point? And so it allows the bank to lower their costs potentially, broker to, earn higher fee potentially. It makes actually a lot of sense. Is there anything else you can say about that?
It really does. On every occasion, it makes me feel better about taking a larger fee from a bank because there's not a middleman. And I say a middleman, I'm the middleman. There's not a middleman that's a BDO, but really I do too much, because there are a lot of banks that would pay me the same exact fee, whether I handed them, here's a tax return, an email address, and a phone number, call this guy. And I could get the same fee as what I do now, which is put together a credit memo light, a full SBA package. It's ready to present to a credit officer immediately. So a
Right.
BDO, I don't know. The ones I have that are really good, they'll go to bat for my clients. They trust me. They trust my clients. They will take a deal and present it and kind of do the some of the legwork in terms of selling to their shop where I don't have to.
Right. It's their kind of ushering the deal through their own internal process.
Yeah, I kind of look at like the BDO as definitely somewhat of a quarterback. Many deals you really do need someone internally to really go to bat for you. And obviously, right, if you're dealing with a larger bank, you're not going to be able to just go directly to the chief credit officer when they're doing, a couple of hundred deals a year, most likely. So to me, like the BDO model is great. And, part of what we do is try to really find the BDO that's going to, really go to bat for us, and not just someone who's collecting paperwork and just, shoving it around internally. So to me, the BDOs are just golden.
I think one more comment to just jump in. I think there's a huge difference between the top lenders, someone like yourself, Ray, for example, not to butter you up, relative to some others where the term sheet gets signed and from their perception, like they're just out of the equation. The best BDO is like an offensive coordinator, right? Like they're helping to run the whole game plan and basically being involved in the background from start to finish. And when things are deviating from how the plan, like how the game's supposed to go, they're getting involved to move pieces around behind the scenes. And then there are people where term sheets signed, the sale's done, and they just take a step back. And that avatar we don't look to work with at Pioneer.
All right, Matthias, you hired a chief operating officer who's actually like an actual SBA loan closer, which you were also actually, funny enough. But I thought that was a smart move because closing is the hardest part. It's where most of the time is spent. But can you explain your thought process behind that strategic hire?
Yeah, so my thought process, Ray. So I guess just to give the background. So I have a business coach, this guy named Christian Ruff. So he's a former special operations night soccer helicopter pilot. Think about, flying in SEAL teams, things like that. That was what he did back when he was in the armed services. And so last year when I started working with him, I kind of thought to myself, how do I create a scalable organization, have operational leverage within my team? And so I thought, instead of being fulfillment, sales, wearing all the hats, if I have one number two person that really understands SBA, I can remove myself to a degree from fulfillment and focus on sales, corporate strategy, and more kind of big picture stuff. And so that was the rationale or reasoning behind hiring the chief operating officer and basically having someone to lead the leaders or managers within the organization. So now we have a sales team, an analyst team, and then also we're building our closing aspect too.
Why did you go with someone with a really strong closing background and not like more of a, I don't know, sales or underwriting background?
So Valerie, the lady that we're talking about here, initially I needed someone that could kind of plug in the hole for closing that could really help in the fulfillment side. And so I wanted someone that really knew that side of the business. And so she just happened to have, had leadership experience and similar. But as far as the persona of someone that's an analyst, they're not as people focused or like relationship focused as a closer is in the deal process. And so that was one of the big reasons why. As far as why not sales, I would say candidly, if I was going to hire someone to do sales, I just had them do sales. And so I was trying to think about what type of background would most resemble like the operations management type in a bank. And that was kind of how I stumbled on this.
Okay. Well, that's interesting. Yeah, and from a staffing perspective, you guys are, I don't know, maybe the biggest, I don't know, SBA loan brokerages, typically I've seen them with, it's a one-man shop. Maybe they get to like 3 people, but you seem to be hiring a lot of people. I'm gonna go to Jerry now. Does it really take, like, to close an SBA loan, a BDO, a broker, the bank's closer, your own closer, the borrower, and the attorney, like, to put together a batch of closing checklist items? Like, is that the state of the affairs right now?
So first I just say respect everyone's efforts to try and grow their own shops, It's definitely something I've been trying to do since I started in 2018. In like the way I see it is I'm not looking to duplicate what the bank's role supposed to be, right? So the bank's supposed to have an underwriter or a closer. I think like from our perspective, from a broker standpoint, I think the biggest bottleneck that we have is kind of, maybe the sales and the initial evaluation of a deal to see if it actually has legs and if it's worth pushing through or not. And that's kind of where I like focusing my efforts in terms of hiring, so I'm at that 3-person mark, like you said, Ray, remains to be seen if we'll continue growing. But we all know that there's a ton of deal flow out there, but how much of that deal flow is actually solid? That's kind of our job as brokers, making sure we're getting a good deal and then setting them up with the right lender. Ultimately, the bank will have their own underwriters, their own loan closers, their own processors, and our job is to kind of possibly coordinate that with the client who kind of gets really super super overwhelmed throughout the entire process. So I don't believe in duplicating what the bank should be doing. I'm kind of more taking the role of helping the client fulfill everything that's needed from the bank's perspective. And again, just focusing on making sure that the deals coming in are solid deals that make sense to push forward on.
Amazing to see 3 different models work, by the way. I mean, that's kind of the cool part of this panel in particular is you guys all have very different models. But I'm trying to look ahead to where it's going, Zach, and you are, to me, where it is going. Now that I know that you're, bypassing the BDO, you have LSP experience. I'm curious, like, do you see this trend continuing where, you're going to just be able to do more of the work on your end? Because to me, the banks are slower to innovate. It's just harder to get stuff done in there. And the more you can bring on your own plate, granted, there's, pros and cons to that, but you can probably be more efficient and justify higher fees. Do you see like a situation where more of the SBA employees are coming onto the broker side and the work's being done there instead of at the bank?
I think so. I think there are still avenues where the traditional model works. Ray, you guys actually have set up kind of what when I was with my dad, the way we looked at it, the way I look at it now, the absolute, in my opinion, worst thing for a borrower is today I'm talking to a broker Tomorrow, I'm talking to the BDO, and then I'm talking to the underwriter. And now I have a question and I don't know who to call. I don't know who I'm supposed to deal with. So you guys have the coordinator position set up, which is, in my opinion, huge. And that's almost what I try and be for all of my clients. So at every stage, until we hit the closing table, they call me directly. And I piss some closers off, I'm sure, because they send out their checklists and I do my own thing. I collect their documents in my closing portal. I do my own checklist and I say, here you go. There's nuances at every bank, so we've got to follow their rules. But
That's right. You posted on LinkedIn that a closer, you kind of, I think you struck a chord here, and it was like, I read it and I was like, I could 100% see that happening because I've been a part of those internal conversations before at, my shops. It's like, oh, the broker has his own portal and the stuff's sitting there, you can go get it, you know? And it's like, oh, well, just send it to me. And, we could have, I think the comment was like, oh, we could have avoided all this, if you would have just sent it to me in the first place, basically, even though you already had it sitting there packaged up perfectly.
yeah, exactly. And some of that is my downfall, in that I don't want to. If I have a way of doing things, I want to do it my way. And some banks that works with, some it doesn't. I am not always like, super rigid. In that particular case, I was outside, I was on my cell phone and she's like, "Hey, send it to me." And I'm like, you have access if you need it right this second. This is how you can get it right now." Um,
Right.
and she didn't like that
Well,
answer.
and that's, well, it's interesting because this was a deal in closing, right? So in closing, the closer is such a big part of the closing process. And in my head, I have I'm blessed with great closers. I like my closers a lot. But I've worked with some god awful closers. And like, it's such a critical role, and a good closer's worth their weight in gold. But like, you're dealing with the borrower every day. That's a customer service role in my opinion. We're still selling at that point in the process, whether to the borrower, the referral source, and a lot of it's on the closer's plate. They've got so much to do and it's stressful. So I don't know. I would love to workshop how that whole dynamic can be improved, because I can understand fully where both sides are coming from on something like that.
I've had banks tell me, some lenders tell me that, yeah, you can't deal with closers. Like they can only talk directly to the borrower, and I'm like we're here to make their lives easier. We should be, at least. And it seems that there are brokers out there that get very combative and, create issues and things like that. But I think, like, you know, I do recall the LinkedIn post that you mentioned from Zach, and it does sound like a ridiculous story.
Yeah, there's some
Yeah,
banks out there that definitely try to guard the closer from
right.
the basically from interfacing with the referral source, and it gets challenging because then the lender has to be the go-between, and the job of the lender is to be developing business, right? Like either out in the field, going to conferences or whatnot. And so with specific banks that I won't name on this podcast, sometimes it takes 2 days or 3 days to get an update if the lender is gone or they're on vacation.
I think it's a function of the closers having too many deals on their desk. Part of that is the economics of an SBA loan division right now. Um, Everyone's got to do a little bit more, but you're 100% right. I mean, I can tell you that um, even my best closers doing an amazing job sometimes don't live up to the expectations of like a borrower or a broker who wants, updates, like a BDO might send updates instantly almost in the beginning of the process, right? A closer's not going to be able to respond in 30 seconds because they're closing 12 deals over here, right? They could be in a closing. So there's just this tension in the closing process because there's like just a gap in sometimes the expectations and what's being done. It's an age-old problem that probably goes back to the money store days. There was another post you guys were talking about LSPs. What's going on with LSPs? I think Matthias, you were seeing like a trend of lenders going to LSPs.
Yeah, so some banks, right, that I work with at Pioneer, initially they had in-house underwriters and closers, and over time they've started pivoting those functions to LSPs just to save on costs. And over time, like, if that trend continues, not like no rub at LSPs, but it's gonna make the client experience worse because things will take longer. You'll have more cooks in the kitchen. It takes more control away from the bank, and it becomes too convoluted from a process standpoint.
I made a decision a couple years ago already after one bad experience with a lender that was using an LSP. Like, I'm not dealing with lenders that use LSPs, you know. I mean, first of all, they didn't actually disclose it to me they were using an LSP, so they were just, I was under the assumption they were underwriting it in-house. But like Matthias is saying, it's another degree away from getting the deal done. And honestly, a lot of these LSPs have their own processes, their own criteria. And I just found it to be very challenging to deal with a lender that uses LSPs.
That's interesting. Most shops start off with an LSP. To me, that's their function. To hear that they're going the other way is concerning because if you're a established shop and you're getting an LSP to save money, that makes no sense
Should be brought
because
in-house.
an LSP is supposed to be more money. I mean, the only reason an LSP would be less money is if they're paying their people less, which means they're getting less talented people and they're making them all do more, which means the customer service is going to drop. Versus if you just hired them directly, you would think you'd be saving money. The LSPs have a different model, I guess. Just to kind of encapsulate the point, it's if you're a bank wanting to go out and get volume, get SBA 7A deal flow, and loan brokers are the primary way BDOs are doing that right now, you're going to have a hard time if you're using an LSP. Would that be an accurate statement?
Absolutely.
Yeah, I mean, the more you have an actual team and it's the bank with the autonomy and the control and less different cooks in the kitchen, for us as loan brokers, I don't want to speak for Zach and for Jerry, but for me at least, it makes it more attractive on the margin to work with those banks.
Now, Zach, coming from an LSP, do you have a different take on this?
Sort of. I don't think it matters as long as, like I was saying, that the who's facing the client remains the same. So I have worked with lenders in the past. The BDO brings the deal in and then they pass it off not to their internal underwriter, but they pass it off to an LSP. And now not only do you have a different first name of the email coming through, you have a different domain coming through to the borrower. And they're like, who is this? Who's this? Whoever the LSP is, person that I'm supposed to be talking to, and they're asking me for tax returns. And it just makes the whole process feel less personal when, at the end of the day, I think SBA loans are commodities, but they're far from an auto loan or a home mortgage. They are transactions that require a personal touch. So to me, a lot of banks, we still do loans down to like 100 grand. So if I'm dealing with a bank working on a $150,000 loan, I'm not going to nitpick on where they're getting that underwritten at, as long as they're still the face of the deal or allowing me to be the face of the deal and letting that LSP or other shop kind of do their thing in the background.
Got
Yeah,
it.
if you don't mind, I'll just jump in here. One of the earlier deals I got done was actually the acquisition of a assisted living facility. The borrower had reached out to me through LinkedIn and said, Jerry, hey, I'm trying to buy this facility. And we're like 4 months into the process and we have no clue what the heck is going on. Like, we're just like nowhere. So I took on the deal. And we're moving through the process and we're getting a lot of information from the bank that they started the process with. They basically went to a local bank, really small local bank. They thought that would be, the best solution. I think the facility was banking at that bank too. And it turns out that bank, that lender, closed like 5 SBA 7A loans a year. So naturally, they're going to an LSP to get the deal done. And like I'm getting like emails forwarded to me and documents, just bank letterhead, LSP letterhead, and communication just appears to have like broken down. The BDO at the bank was pretty clueless about SBA loans. He didn't even understand like where they stood in the process. it just turned into a massive headache, and they literally just sat there for 4 months spinning their wheels. They're at the risk of losing the deal. I mean, ultimately we got it done with a top 10 lender, but for me that was the first time I saw, the LSP model in play, and it was pretty disastrous.
We use an LSP for small loans. I mean, we started with full LSP when the program was started, and have finally, we have actually 2 more closers starting this week. So I think we're finally good, and off, but we still do it for the small loans. Yeah, the broker emailed us last week saying like, who are these people? And, you guys need to explain who this is. And we did, but still, it's just, the point is, whether we said it or not, like, people are confused, people are not happy. So I do fully get that is a concern. My thought is like, start with an LSP, grow, and by the way, have somebody who knows SBA starting the program with an LSP, then scale it up, and then get off the LSP and go in house. I mean, it's not that complicated.
The only time, Ray, on the LSP thing where I've seen like in the deal process it becomes a point of confusion is with a business acquisition when you have the LSP reach out to the seller and they're like, "This is not
That's
the
weird.
bank."
Yeah, that's weird.
Right, like to get tax transcripts or something like that.
Yeah, it's
Yeah,
really weird.
it's crazy. Guys, I'm gonna wrap up with some fun stuff here. I'm gonna, switch it up a little bit. Whoever wants to answer this can answer this. When you guys were starting out your brokerages, was there any advice that you got that just turned out to be dead wrong?
Yeah, don't do it.
Who told you
I
that?
remember walking into someone's office and telling him what I plan on doing, and it turned into an hour tirade about not doing it, and I'm thankful I did not listen to that individual.
What's the craziest thing a lender's ever said to you? And just think about, I think Zach already kind of gave us one, and that's not that crazy with the portal thing, but just some off kiltered comment. Is that a word? Off kiltered? Sounds like a word. We'll make it a word. Anything come to mind?
I've got several. I feel like the wildest thing to me, and it happens on multiple occasions. I've got one. I posted about it as well. But I sent a file to a. It was to a new. Wasn't a new BDO. She's been in the business a long time. She had recently moved to a new shop, and I sent her a deal. So if I send the BDO a deal, it's always like the deal's going to be hairy, because my typical folks aren't going to jump on it. Anyways, this met what she had told me was her box. Literally 20 seconds, she fires off, "This doesn't work. This girl's not strong enough. The deal doesn't work. It's not SBA." Like, I forget her exact words, but I was like, ask me a question. The question she should have asked was, is there anybody else stronger that can join her? Which was her mother-in-law, who's loaded, and help the deal get done. So it's like, that's all you had to do is ask a question. I just brought it to the next shop and they were happy with it. So
That's good. That's how I train, my folks. Same thing, always give an option or an out, hey, yeah, we would need another guarantor with some financial strength to get this done, or maybe hey, this deal might work in 4 months if we file a tax return here and wait for the end of the year or something like that, or hey, this might work with a seller note or whatever, stuff like that. Tends to go a long way.
One of the back to that question, Ray, is so with our process, the way it works now is we'll sign an engagement letter with someone before we take them on as a client. And so in one circumstance, we didn't see this person's personal financial statement before the engagement letter got signed, which is kind of a mess up on our part. Negative net worth. And we put the deal in front of a BDO, and they're like, "Yeah, I think we can get this done." And I thought, no way in hell, like this was a script of my sales guy to even send this engagement letter without vetting of the PFS. And fast forward basically like a week after that, they came back and said they could do it.
It goes to, kind of the golden rule is, if you can't do the deal, say you can't do the deal, up front, and don't drag us through the mud. And that's kind of sort of like the most important thing, I feel like, because like you guys say, time kills deals. Well, I say that. I think I actually coined that phrase. But it's funny that Zach was saying about the other day, he sent a deal and 3 days later, he finally got a response. When I started out, which was like 2011, 2012, 5 days for a response was quite normal for an initial response. In fact, the packages got mailed to me, and I feel like I'm the old guy on the panel now here. So it's interesting. I think the expectation I set for me and my team is same. Well, first of all, within like an hour, it should be, hey, got it. I'll get back to you. So I got it. And then it's same day whenever possible, but always 24 hours. There's really not I mean, if it's taking more than 24 hours, something's wrong. And I mean, maybe you want to be generous and say 24 to 48 hours with at least a upfront acknowledgement, but like there's going to probably be questions, I think, most of the time. And like, let's just figure out the deal, hit the high points, get the questions out. But it's interesting. 3 days now is actually way too long. That's funny.
Oh,
It's
yeah.
true, though. It is true.
No, when I started in SBA world, we were still scanning like 500-page 10-tab binders, which, before that, people were actually mailing them. I got to use a scanner, but I would like go to a borrower's office, get signatures on all the tax returns, seller's offices, like physical binders, scan in 500. We were all GP. We didn't have none. Maybe one or two of our lenders were PLP, but I think we were all GP. And we were still closing deals in less than 90 days. It's like, you just do the things that you need to do, and you can close an SBA loan pretty quickly.
Back on the paper train, back when I started, sorry to interrupt the flow here, but just funny quick story. Back when I started in SBA in the spring of 2015, the bank I was at, their corporate headquarters was based in the Milwaukee market. And people would go back and forth, loan officers would, with the paper files in your recycling bins. And there would be like a binder of the file, and you would bring the file to the compliance lady in that office on loan committee Wednesdays and basically get your exceptions cleared in person to be able to close the loan. And so you'd see these lenders like hulking around recycling bins in the corporate office.
And that was just 10 years ago.
I think that was at Byline, Zach. This was
Yeah.
the bank before Byline. So
Okay, yeah.
I think I got one paper package before. Just been following up with someone for weeks and no response, and then just one day like FedEx shows up with like a stack of it was like 3 years of returns with state returns too, and they were operating like multiple states. It was utterly absurd.
Zach, are you aware of that video your dad made about a day in the life of a BDO?
Yeah. Oh, yeah.
That's where we pulled that picture from. We're going to be playing that with the Money Store episode and stuff like that. But yeah, it's like the packages came in the mail. It's just crazy. And people expect things to happen faster. And SBA has just been always notoriously slow. I mean, 60 to 90 days isn't bad, but up front, the urgency needs to be there specifically because, I don't know, Jeff Bezos just kind of ruined it for all of us. It's a grind now, but it should be a grind because we've got really great careers, as BDOs and brokers, getting to help these small business owners and make a good living, while doing it. And every day is different. It's fun. It's a lot of problem solving. So it's all good stuff. I want to leave it with one more thing. So I'm just curious because, the deals start, with you guys and your initial consultation calls with the borrowers. What's the general vibe of those calls? Are they pretty responsive to working with like a broker, basically, or is there any pushback? And if so, what is the pushback?
There's definitely pushback. Not every time. I would say it's a good mix, but the pushback is always why? Why do I want to work with a middleman when I can just go down the street to my bank? Luckily enough, I would say over 50% of the people I work with have already talked to their local bank and found out why that doesn't work. And then we step in and show them why you need a national SBA group or even a regional bank. We have some that are very regional, but they're SBA focused. But yeah, I think always there's why do I need a broker this is going to cost more. That's definitely a mentality that's out there.
Typically, the pushback story that I've seen, one is, where is the fee coming from? Is it increasing the interest rate? Is it coming from the lender's commission? Things like that, plus two. And them wanting to understand, or the borrower wanting to understand exactly how the schematics of that work. But for us, typically the pushback is one on if we're working with them, that they're not going to be doing outreach to banks simultaneously. Sometimes they might have, 3 banks that they've talked with before, and I say, go reach out to them. If they can't help you, then come back to us, because we don't want to be providing white glove service if they're simultaneously doing their own thing. That's kind of pushback item number one. I'd say number two is based on, or sorry, number two was back when I was starting Pioneer, is kind of explaining the concept of like the broker and like the loan broker. And it was more foreign at that point in time. I feel like now more people get it because there are more SBA loan brokers, like all of us here on this call and others as well. And so the fact that it's become more mainstream, I think, is actually beneficial to all of us because it's less of a niche industry and more prevalent. And people can go online, Google SBA loan broker, and figure out what it is pretty quickly.
I think my experience has been more like Zach's, where I like to say my main competition are the lenders themselves, right? Like some could just walk into their local bank, whoever they have their banking relationships for many years. But typically, like most of the leads we deal with are kind of already warm in a sense, whether they're coming through a referral source, or they've been following us on social media and kind of know, like we really know what we're talking about. But when they're cold, absolutely, the biggest hang up is, why do I need a broker? Why can't I just go to a bank myself?
That sounds crazy to me because I know the answer to that question.
We all do.
I mean, to me, I thought you guys were going to say these are all slam dunk. I convert 100% of my leads to clients because, like, hey, I have access to all these different credit boxes, and I mean, obviously I'm in it, so I know that SBAs are not cookie cutters, and everyone else probably thinks they are, and it's fully commoditized, like a home mortgage, but I don't, and like the deeper you get into it, all these different nuances, and then you can help navigate them, but you still probably convert a lot more than someone like me who has one credit box. Because at the end of the day, that's the biggest thing is you have access to multiple credit boxes. And I think that helps get the deals to the right place. But you're right. It's just a matter of explaining that the SBA market is actually not a cookie cutter type of deal. It's more of like an insurance program that banks participate in to design their own programs. And so there's actually all of these different options out here. And the truth is, I would bet, like, for someone to come in to get their first SBA loan and just try to go to a lender directly, I would bet that they would not land at the right lender. I mean, just the odds are against them that they actually get to the right place. And then, that's either going to waste time or they're just not going to get as good of a deal as they could have gotten.
Yeah, I think my conversion rate's like 4 out of 5 for people assigned LOIs. Like if it's someone that's been kind of listening to the podcast, they follow me on LinkedIn, and they understand what we do. The ones that I haven't converted are ones where they want a carve out on the exclusivity, or like their expectations are just off reality. Like there was a guy that we were talking with that thought banks would tie an SBA loan to a benchmark other than prime. And I was like, that's not a thing. I haven't seen that before.
Yeah, you can. If you have a time machine.
Okay.
If you have a time machine.
Well, that's also like big bank territory also, right? That's that's something that like I've seen from like, let's say, like Wells Fargo, for example. They'll do like they'll use the treasury, but good luck getting a deal through.
Well, I think it was a couple years ago where they switched it, and that's really interesting to hear that 4 out of 5. It sounds like a dream, Matthias. I mean, when you only have one thing to sell, you're like at a bank, your conversion rate's going to probably be like 3 out of 10, or switch it up on
I'm looking at this scorecard for one of my sales guys last week, and he had 3 deals where there was a sign.
We got OKRs over there at the brokerage.
He had 3 deals or 5 calls with deals under LOI, and he converted 3 of them, so 60%. So
Nice.
Amazing. Any final thoughts you guys wanted to get out here that we didn't cover today? I mean, the point of this podcast is really to give the lenders an idea into, hey, what's important to a loan broker? What can help me in my, BDO career, or if maybe I'm a director just trying to drum up some more business for my division. What do I need to be doing? What do I need to be thinking about?
I was gonna mention something a little earlier, but I guess I'll throw it in now. Like a massive pet peeve of mine is kind of like respect the work that the broker put in, right? So like something we strive to do is pull together a really good, complete, clean package. We also try to give a very good summary of the deal. We also like to get ahead of all the weak points and try to find those mitigants. Like off the bat, the lenders we work with will just be very transparent about all that. So when we send the full package to a lender, with all these items, and then maybe it's waiting 3 days, like Zach mentioned earlier, or a week, and you get back like a boatload of questions that have all been addressed, or you can kind of tell that they haven't actually reviewed what was provided. Like to me, that's just like a big no-no. So if I'm like experimenting with a new lender, the odds of me working with that lender again is very slim, and I'll probably just cut them loose pretty fast.
Come on, guys, that's sloppy. That's light. That's sloppy. Then that's when Jerry responds, per page 8 on the plan. Here,
We
per.
try to stay professional.
Yeah, my memos are very clearly, here's what's happening. Here's the positives. Here's the negatives. Take it or leave it. Without fail, the email I get back from a BDO I'm not going to work with is, what about X? Or how are you going to mitigate this? When I sent out yesterday, it's a small deal, 250,000. Doesn't require real estate. If the borrower would pledge his real estate, it'd be a slam dunk, but he won't. So that's front and center. He will not pledge real estate. BDO responds to the email and says, "Can we get his house?" I'm like, dude, no, you can't have his house. That's why I'm talking to you. Otherwise, I would have had this done last week. So yeah, just to Jerry's point, and just look at what we've put together. We aren't, and maybe that's kind of par for the course right now because there are so many newer brokers out there. I've dealt with a handful that they are sending sloppy packages. They don't know what they have. It kind of smells like an SBA deal, so they throw it towards an SBA lender. And those are the deals where I imagine a BDO does have to dig in, ask more questions. So I'm
Yes,
sure there's a reason for
100%.
what they're doing, but not when it's me or Jerry or Matthias.
That's exactly. That's an important distinction. 100%.
So, question for Zach and Jerry, not to be the game show hosts here. What are you guys seeing now,
that's
like
Shem.
this year? Oh, sorry. What are both of you guys seeing now as far as like the client reaching out to you that has a deal under LOI, and has the credit profile of the sponsor buyer gotten worse or like more of a range in the last couple of years, or is it about the same? As the business buying space has really taken off due to Twitter, Instagram, similar. I'm just curious what both of you guys are seeing.
For me, it kind of just really runs the gamut. I mean, nothing's really changed. You have the good ones, you have the weak ones. Nothing's really changed in a sense. I'm more seeing a challenge in the quality of deals, to be honest, on the acquisition side. A lot of really cruddy deals out there.
I really haven't seen much of a change. My clients are historically weaker balance sheets, weaker credit, weaker everything, except for experience. I do a lot of employee buyouts, manager buyouts. And then the folks I'm working with that are more out there looking for businesses, it's always pre-LOI. I don't know the last time I had a client come to me who was already under LOI on a business. I say that. I actually just had one that we got signed up last week, but usually that's not the case. And I coach them through the whole, here's where you could go find a business. They bring me Sims. I'll review it for them. This is a fit or it's not a fit. But I think overall, I'd lean towards Jerry. I feel like the deals themselves are more out there than the borrowers are.
Yeah, it seems like I mean the range of buyers. So like we have I use Calendly for intake. So when someone goes to our website, they'll fill out a questionnaire. One of the questions is how much capital they have to buy a business, and it ranges. Like I had a guy that put down a call the other day. It was $3.5 million, and one last week where it was $5,000. And it just seems
Yeah.
like the fairway has really widened as far as the inbound with pre-LOI people specifically.
Yeah.
I know that Ray. Sorry, go ahead, Zach.
I was just going to say, I closed a deal last week where the guy didn't even have $5,000. But we made it happen. So $5,000 sounds like a lot to some.
Yeah, I think Ray had posted about this a few months ago, perhaps on LinkedIn. Something that BDOs just love to hear is when when they ask the buyer where you're getting the down payment from, and like, we'll just make it happen. And yeah, like kind of like Zach, I see that more often than not. So yeah, I definitely don't, I would say the majority of the clients we work with are not like super strong necessarily, but they usually have a plan, and even if they're early stage, they do have a solid plan that they're ultimately going to come through on.
Well, fellas, that was hugely insightful. We went long. That's great. A lot of good stuff in there. Thank you so much for participating today. That does it for this episode. Ta-ta.
All right, that's it for this week's episode. If you want more SBA content, you can sign up for our monthly newsletter and check out our sister shows, SBA Today and The BDO Show. We'll leave a link in the show notes. And don't forget to subscribe to this podcast so you never miss an episode of The Art of SBA Lending. Ta-ta.